Hi guys, a warm welcome along. It is 28 minutes past 7 in the evening on Thursday the 11th of August 2022, and I just thought I would take some time to have a look at where things are sitting at present and to ask the question, is it working yet? A brief look around the key statistics. Currently, the Vanguard S&P 500 exchange traded fund has traded on the London stock market, rose by just over 1% today, and closed at 65.74. As I say, that represented a rise of just over 1%. For the week, it's up 1.5%. For the month, it's up 6.75%. And the figures then alternate depending on whereabouts it was on the various curves going back over the past year. But in relation to the past year, we're currently sitting positive just over 8.1, nearly 8.2% on this time last year. So I thought what I would do is just have a look at the results so far, because obviously I've mentioned dollar cost averaging ad nauseum, and I did do a video about that and why it works so well, particularly with a brand new investment. But let's just have a look and see where we are actually at. So currently the value of the investment in total is just over 2,400, and the profit on that is about 128 as things stand, or 5.6%. So what I want to do is just to work out, let me just calculate how much we had actually invested. So the amount that we have actually invested in cash, if you like, would be 2408.12 less the profit 128.12. So that is 2280. And the number of times that we have done that is going to be divided by 120, because it's £120 each week. So we've put in 19 investments of 120. So let's have a look and see where the predictions that I had done in the past indicated that we should be up to at this point. So 2,280 invested over 19 investments. Okay, so on this sheet, the versus saved in bank figure is where we'll find our 2280, and the portfolio value, predicted value, shown here, 23, 24, 36. So that would represent a rise of, let's see, that minus that. Okay, so currently, going by the typical market performance that I had calculated in the past, we would only have expected to see a rise of around about £44 in the value of the portfolio. As I say, we're currently looking at about 128, which is significantly more than that. I think that's due to two factors, two reasons. One being that we were able to dollar cost average significantly, so we were able, whenever we started at a higher point on one of these curves, As the price fell, we were able to continue to buy and reduce the average price. And the other factor that I think has influenced it significantly is the fact that what we're looking at here is a recovery curve as opposed to a normal growth curve. So in other words, it is accelerating, it's growing faster than we would normally expect just for normal growth. And I think that's demonstrated well by the fact that we're up 6.75% compared to this time last month. Yeah, based on that, I think I would declare it is working yet, and the predictions that I had made in the past are fair enough, perhaps actually slightly on the conservative side. I usually use a figure of around about 10% per annum as the average growth for the S&P 500. If you want to know what the actual figure is over a 40-year period, I encourage you to look up J.L. Collins and the Simple Path to Wealth. I'm not going to spoil it here, but it's not 10%, to put it that way. Guys, thank you for watching this evening. If you enjoyed the video, if you like the content, please hit the thumbs up, and if you want to see how this journey continues, feel free to subscribe, and if you really want